Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is TGIF. Thank goodness. Goodness gracious. Great balls of fire. Thank goodness it is Friday. And it's been, from the 4-day weekend we had last weekend to the full 5-day week we've had this week with the end of the month. We're in our last month of the year. We have, just the markets are trying to, I guess, find a real direction. I mean, they're very firm. The S&P 500 has been stuck between a range of around 4,520 kindish to the 4,500 and or 80, 85, something like that. It bounces in between those. We did have a spike one day off the opening that ran it up to 97, but overall it's been trapped like that for almost 2 full weeks now. It's been since November 15th. Here we are now, December 1st. So the markets are, stumbling, tripping, falling, sliding, however you want to look at it. But they're trying to find their direction, and they're stumbling about it. They're not doing the best about it, but they just keep on marching. There's a real concern with the beginning of next year. That's what's kind of like the echo. At the same time, there's a lot out there that don't understand why anybody would assume that the Federal Reserve is going to start cutting rates over the next 3-4 months. But it is an election year, and they don't want to not keep the markets happy. They don't want markets collapsing during an election year. That'll really hurt the power to be, I guess you could say, the presidency that's there now. So, there's a lot of confusion and a lot of uncertainty, and it's just going to get worse, I would say, over the next 3 months. Especially with the primaries going. I wonder if the markets would rally if Biden actually lost a couple primaries. That might be a very positive thing. I don't know. It's hard to say because just the whole spin that goes on. But you can see there on the dollar index, we got it up on J4X. You can see it's a second day in a green. You can see the fast is trading at 62.5, and the slow is at 38.2. So I mean, it's a pretty big move going on there. It's like a 37% above the slow. And as you can see here on the what do you call it, the beta, we are 2 days into the buy also right there. And at the same time, you see the weekly is trying to climb back up a little bit. We'll see how it acts in the end. You see over here on the older platform. Let's put it up on the screen here. There's the older platform that we've been using for years now, decades. You can see the weekly is still down. You can see the slow right there, the green line. Not lifting anywhere near the manifold itself, right there, the negative manifold. It's well deep down. And same thing with the fast. Our algorithms, both of them, are deep and down and buried. And even when we go back to the beta, you can see the same situation. They have started to pierce the manifold, but they're still below the manifold. The zero line itself. They're not below the manifold. The fast is through the manifold, the slow is heading towards it, but they're still both underneath the zero line. All right, quiet. I guess, being Friday, a lot of people have already started the weekend. They're having their adult beverages and they're not thinking about trading. So from there, we slide over to the euro. Let's see what the euro is doing. The euro. And there it is, dollar euro pairs trade. You see it's the second day pressing down. Let's see how there's the fast stochastic at 26.4, the slow at 53. It's almost a 50%. It's a 50% discount at this point, dropping down. So the pressure is on the euro. Let's put it up over here. Let's see, where do we put it up over here? Let's put it over on the beta, and the beta is showing the same type of action right there. Driving down for 2 days, and the fast is dropped underneath the zero line. And when it comes to the week, where's the weekly at? There it is right there. And the weekly, is dropping down. The fast is dropped underneath that too. Now when we go over to We go to right there. There it is, a second day in a sell. And weekly is looking very firm on both. I mean, we do have the fast dropping underneath when it comes to the beta for the old platform itself. It's looking very firm. They don't seem to be that worried about the pair. In other words, it's just a dead cat bounce. That's pretty much what it looks like to me. Just a dead cat bounce. A sip of water instead of tea. We've been up even earlier today. So to me, I got up right after the London Open, I guess. Well, the first hour of the London Open and the Frankfurt Open and the Swiss Open, the Milan Open. I've been up right around that time, and boy, amazing how much work I have to do on the markets. And next thing I know, it was we were coming towards the last hour from the webinar out of nowhere. So yeah, the euro is not falling apart when it comes to the weekly. It's just showing it on the daily at the moment, just a little selling going on. From there, we'll go over to cable, and there is cable. Cable did push into the sell yesterday. You see it right there. Is it right there? Oh, wow, it's all zeros. It never really made it in there. So now it's trying to bounce up, but we are underneath. And the weekly is looking very firm here, too, at the same time. And on the beta, let's see what the beta looks like. Oh, let's put it up on J4X, too. And there it is on J4X. You see there, same situation. The fast stochastic is at 58.1, basically. And the slow is at 73.7. So, it's what is that, 18%? 18% discount on it right now. So the pressure is on. The slow is dominating the move at the moment. And when we come to the futures contract on the beta itself, you can see, you can't see. You can see right now, right there. You see it pressing into the sell. And it didn't go into the sell yesterday. That's cool. And the weekly is pressing down, but nothing major. Nothing major compared to the dollar index itself turning back up, which is curious in its own right. But again, nothing major. It's just I think dead cat plants. Yo, Robinero. It is TGIF. Looking good. Looking forward to. It's going to be a busy weekend, so can't say it's going to be a lazy weekend. A little tea now too. So there's the cable, there's the euro, there's the dollar index. Anybody wants to ask anything, be my guest. Is anybody interested in any particular product at the moment? And I guess from here we go take a look at Swiss. And I'm seeing that on the car. FBI carjacking in D.C. FBI searching for a fellow who carjacked a FBI employee. My God. Mr. Biden wants the country to be totally lawless at this point. I mean, it's amazing. They love the idea of people just being lawless. And I don't understand why. You would think that they would protect the civilization, but they have no interest in protecting America at this moment in time. I'm surprised it's as peaceful as it is. So, there's the Swiss up there. You see all that nice, slow, steady burn down. The red, the fast stochastic at 34.8, the slow at 24. It's trying to lift. It's been trying to do that for a couple of days. Let's see, right there, that was at 23. Is that right? Yeah, that's 23. And right here was at 15. So the last 2 days, it's been above the zero line, the three-dimensional zero line when we look at the stochastics against each other. And but we're still got red hinky ashkies keeping us down. So from there, let's take a look at it on the Chicago Quant platform. And there it is right there. And there it is right there. And so right there, you can see, right there, there we go. You can see it's been underneath. Let's see, where's that mouse at? Right there. There we go. You see it's underneath, staying down. A little stabilization, little bounce right there, making it low and then lifting up. And we're a little firm there. We got a green and a red, but we're not really seeing anything that would tell us that things are, upside down or wrong. Just remember, traders, we're at the end of the year. Every day I'm going to remind you that a lot of the trades is accounting going on now. In other words, they need to flatten out positions, or they need to add to positions, or they need to, close out tax losses, or they need to window dress on their portfolio so that their investors see that they also had some of the best stocks of the year. They put it into the brochure, like, they might have just bought, like they have, let's say they have a particular stock that was one of the hottest stocks of the year, but they only have, say, 40% invested in it into the portfolio, and 60% has not been invested. Well, what they do is they'll move it up to full portfolio, and at the same time, in their perspective, when they put it out to the investors, it'll show that they are fully invested in that stock, and then they'll show a gain, of course, but it won't be the gain of the stock. It'll just be the gain of the stock for the performance of the year in general, and they'll pretend that they were invested when in fact they may have only been 40 or 50 or 30% invested in a particular stock, but they want the investors to believe they were invested, and when they see the return, they'll say, oh, well, this was a loss for the year and that was a loss, so it put pressure, and that's why we underperformed. And which is really hard to believe is that when a hedge fund who's been around a long time underperforms, in other words, it doesn't match to the index they're matched to, investors will think, well, maybe next year is going to be their fat year, so let's put more money in it. Seriously, that's the way it works. Hey, you buy low, sell high, they'll say, the investors, right now they're underperforming, so they're low. Let's buy now and add more money. And then when they're doing really well, a lot of times they try to take the money out thinking that they're overperforming. And so it keeps a lot of these hedge funds in business by window dressing, because it looks like they knew what they were doing all year long, but the investors don't exactly see it that way because they're not looking at the individual returns. They're not reflecting the individual return, and all they're doing is showing them what's in their portfolio at the end of the year. So if they bought it 5 days before the end of the year and boosted themselves up to 100% invested in that particular, in other words, when a fund invests, let me go a little bit backwards. I've talked about this before. Since it's the time of the year of window dressing, we might as well describe it. And that is that when someone is trying to invest in a fund, the fund has to take that money and invest it in what their incorporation says, their manifesto. And so let's say they're investing in 40 companies, and then they have like another 80 or 90 that they're always watching and willing to replace one of the 40 with from that 80, like a bench on a team where a lot of the players are sitting on the sidelines and only 11 are out on the field, that type of thing. Okay, so they don't really report the individual success or failure. They just give you an overall view of the portfolio, and at the same time, they buy, say, 2.5% of this. Out of the 40 stocks, they buy 2.5% of each. That's how they start off, and then they may have, say, designated 20 or 30% in cash. And they'll put it in short-term bonds and so forth. And so, say 80% of it's invested in stocks, and 20% is basically in bonds or cash, so they can invest more when needed. And so then what happens is this. Sometimes they underinvest because they're nervous about a stock out of the 40. So instead of being 2.5%, everybody's 2.5%. Some of them are only 2% or 1.5% or 1.25%, which would be only 50% invested. And they're waiting to buy at lower prices, and the lower prices never come, and they're chasing after it, and they're nibbling, and it's rising, and they're unhappy, and they may have only like 1.75%. not the full official 2.5%. At the same time, stocks that have run up at 2.5% that they own and now as part of the portfolio, and it's like 3 or 3.25%, they sell 0.5% of it so that they can move back down towards the 2.5% area or 2.75%. It's like an engine and a piston. It moves back and forth like that. Mountain West. Well, you're getting your bottom a few days later. Here it is. Let's go back to it. Where is it? Let me see. Let's show it to you. There it is. It's finally making the bounce. And it's higher than when you said it was supposed to be. So you are in the right spot at the right time, because it was right in here that you thought we were going to get the bounce. They give you better buying opportunity, and here you are. It's higher now than it was there when you talked about it. So that's good. So it was in the 103.06 area. Now we're trading at the 103.31 area. 103, I think it was 103.07 to be exact. And so we're about 24 ticks. So you've gotten it. And we're in a daily buy for a second day. The weekly is not looking as happy as it should be. But then I don't really think we got that good a bounce hiding out there at the moment. Now, there is a lot of nervousness. The bond vigilantes are concerned. But not enough at the moment. They're buying bonds and they're acting like the Fed is going, and they're pricing that the bonds are going to be, there's going to be a cut anywhere between March and May. That's what they're saying. So, yeah, just 2 days off, nothing major. And you know how, let's see, have 2 point names, Mountain West top and Mountain West bottom. Indeed. We'll make a copy of that and put it there too. Let's see, copy. There it is. Ute. And it was basically right there, that one right there. So let's put it right there. Paste. What are we doing here? Okay, like that. Bingo, bango, bongo. Paste. BOTTOM. Bottom. Why does that look good? Let's try this. Spread it out like that. BOT. Like that. Bottom. There we are. There's your bottom right there. And so it's holding up above it at the moment. Save workspace. Save workspace as. Ta-da-da-da. Ta-da-da-da. Did it do it right? Yeah, I guess it did. Save as. There we go. Make it a little bit bigger. 10 maybe? Or 11. 11's good. Oh, I see. We need to get rid of, put W in there too instead. Bing. Bing. How's that? That looks better. There we go. Let's save that. Save a Rooney. There we are. And so it's hanging around there. Matter of fact, what's the low? The low is 20. So even the low is higher than where you wanted to get in at 103.07. Not bad. All right, so that's what we got going at the moment. I think it's just going to cruise around here because we don't have much strength in the weekly, so I'm not too fired up about that. Doc, would you recommend buying VIX call options now? It went below 13. I don't know. Let's take a look at them. Remember, I think VIX is a lagging indicator. I don't really look at VIX as a leading indicator. Whereas a canary in a coal mine is a leading indicator. The VIX is not. It's kind of lagging and just shows you where the market's at now, not what it's going to do. So, and you can see right here, there's the VIX-aroo. VIX went into the buy yesterday. So we went into the buy yesterday. Let's put that in there. Let's steal one of the green lines from the past. There's a bunch of them right there I can steal. So I'll go like that. And then grab that again, like so. We went into the buy yesterday. I had a volatility day before. And we're in a weekly, so I'm not that excited about it. What was the question? Oh, buying calls? No, definitely not. No. I would need it to show some life, like get into at least get over the weekly buy. That would be nice. This daily noise, I don't see anything particular there. What can I say about any of that? I wonder if we should take a look at. I know we've done it on the beta. We look at the Nasdaq 100 Tech 100 volatility. Let's take a look at that, because that's been a lot more rock and roll of late. At least I think it is. I don't watch it enough, but I know that we have it on there because we were paying attention to it. I think that's it right there. Here we go. Well, no, that's not it. How about this one? That's not it. OVX maybe? I think that's the oil one. OVX. Yeah, that's it. So the Nasdaq volatility, I'm not sure why it's not showing it. Well, let's just put the VIX up there for the time being. See if I can find it on the beta. And then I'll show it to you. There's the VIX. And then let me find the Nasdaq. Let me see. Let me find the Nasdaq volatility index, because I think that's in the 20s. Let's see. Nasdaq vol. Did I get it? No, I didn't get it. Let's try that again. Oh. Why is it being weird like that? Nasdaq. Let's try it one more time. Nasdaq. Why wouldn't it type in there? There it is. There it is. Nasdaq volatility. Let's see. I thought we had that on there, but it doesn't seem like it does. Nasdaq volatility index. There it is. Nasdaq volatility index. US low volatility ETF. Where's the Nasdaq volatility? We'll find it in a second. Copy. And I think that's like 20 something. So I mean that's showing, or maybe it's probably the other way around because it's been going down. So it probably has them all freaked out. Nasdaq volatility index. Let's see. There it is right there. Let's see if we can find that now. Let's try that. Copy. And we'll put that up on the screen because I think it's well worth paying attention to. What's up with that? Let's try this again like so. There. And there. And paste. Search. It's like they don't want to show us the Nasdaq volatility index. I'm not sure what that's all about. Funds, no. Paste. Let's see. Let's try that. They want to send us to an ETF. I just went volatility. Volatility. No, it's really odd. They're not willing to show us the volatility index. I don't understand that. That's confusing to me. Let's see. Let's try it one more time because I had it up there. Now it's not updating. So why did they take it away? Volatility. NASDAQ. Yep. Vol. There it is. Symbol. That's what I thought. So why isn't it not updating? Let's go fix that. We're going to go fix that. Let's fix that. The symbol is VOLQ. So let's go find out why it's not cleaning itself up. Go like that. Go like that. And let's fix that. Let's see. Right. Go like this. Go like, there we go. Now we got it. Okay. Let's go in there like so. And then VOLQ. Right? Yeah, that's it. VOLQ. And let's save that. There we are. All right, now we go over to the beta and we take a look at that. Now, I could have sworn we had that in there, but it looks like we've had an error on it somehow or another. Let's straighten that out. Okay, there it is. VIX options. Mountain West. Okay, now let's give that a spin and let's head for it. I see what the problem was. Now that's odd. Now why is it? Oh, I see. I have to go fix one because it's actually got something that's confusing it. So let's go back and fix this. That's why there's like a comma or something like that in there, and it shouldn't be. So we go like this, there, and let's see. We have to look through all of them. Come on, machine, you can do this. So what is that? That's a, what's the symbol on? There it is, right there. I found it now. We got it. There he goes. Okay, here it comes. Wow, what a battle this is. Why is it not reflecting it? Doesn't want to show us it. I don't know what the issue is here, but it's refusing to show us. Let's put it up. I'm going to take a look at it through another platform just to see if I'm crazy or not. VOLQ. It says there's no match for it. How can it not? $20.21. Now, why is it not reflecting it? I can't get it on the chart, which is really odd. Maybe I have to copy it? Maybe it's one of those things where it's like a 0 or something. I don't know. It doesn't make any sense here. Because it's VOLQ. It doesn't make any sense. VOLQ. I don't understand it. But anyway, it's 21%. It's 20.1%. Basically 20%. And then, you know, we see the VIX here trading at 12.95 right now. I don't, not sure what their mechanical issues are at the moment, but they definitely are having a problem, that's for sure. So, I think the markets overall are, you know, volatility is not a leading indicator, okay? And unfortunately, people think it's like they call it the fear index. And it represents fear, but it represents it in our face, in a sense. It doesn't do it, you know, like days ahead of time. Now, when I was younger, volatility in currencies or Forex would kick up about 2 days before volatility would kick up in the United States. I always found that interesting in the equity market. When I traded volatility very aggressively when I was a young man, it was, the volatility of the stock market didn't get going for a couple of days until the currencies started to show increased volatility. So the I guess you could call it the chain of events, or the factor of events, was more in the currency side watching, not the VIX. The VIX is just looking at 6 different options, and they can be manipulated, especially when they're not deliverable. That's the worst part, is that they're not deliverable, so they don't really represent the real volatility. Individual volatility is so much more important to a product. So in other words, like the S&P 500 volatility, or Amazon volatility, or Apple volatility, you want to watch the individual products more and take them more serious than try to take the other way around. So, all right. So from there, and again, we're not in a weekly buy, so there's no reason to even think about a call. The only thing you want to do is, at most with it in the little daily buy, you want to think more of like, oh, maybe you should not be short, that type of thing. That's about it, because it's trying to lift up. Now. Let's see what else we got going on here. Oh, I got long messages, don't I? So from there, I guess the best thing to look at from, we were looking at the Swiss, right? So let's go take a look at the yen. See what the yen is up to. And there is the dollar yen. Dollar yen lifted up yesterday, didn't get into the buy. Today it's trying to get into the buy. And the weekly is still in a weekly sell, so I'm not that concerned. But you can see that the action is basically just kind of, I don't know. The yen is trying to bottom in here. I really thought that maybe we may have turned the corner on that, but it's the end of the year. They could literally just be adjusting for getting ready for next year. Remember, a lot of this is accounting. You gotta watch the accounting of it all. That's what that's all about. And I know everybody, people, don't want to look at the accounting side, but it is a major part of markets and managers. And so, they do as much as they can, accounting-wise, to make money. I mean, that's really what it comes down to. Warren Buffett is one of the classics. He's invested in companies that have just a little bit less tax law on them. So that's why he owns so many insurance companies. He can gain 1 or 2 percentage points just because of less taxation on some specific companies, a sector. Oh, here goes. There's Mountain. Mountain says, wait for the weekly. Okay, yeah. And would you be long the dollar now? No, the dollar's in a weekly sell still. It's just a dead cat bounce as far as I can tell. Just don't be too short at the moment. Just be flattish, I didn't, as far as I can tell, we don't have anything particular going on. Is there a loss of confidence? I guess that's the biggest question. Are we seeing a loss of confidence in a rate cut? I don't think so. Now, I did see, let me show you the 30-year bond. The 30-year bond was flirting with the daily sell today. Let's go take a look at it right there. Let's fix that. At a certain time, you have to change the session to get it to work right. There you go. You see the difference there. And so there is yesterday. Now we go like this, and we'll see today. That's why we're going with the beta. We're trying to cut out that mess. There it is. You can see here, it dipped down this morning at one point. Or I guess it was yesterday, and then fought their way back. And you can see there's a little weakness in here, but just like this was weakness, it found a way to go higher. Even when they pushed it down here for a day, we're in a weekly buy, and you can see the fast and the slow does not really care that much. The fast algorithm is bouncing off the manifold right there on the weekly, and the slow is even beyond our visual. Let's see if we can tighten it up so you can see that. Nope, not there. Right there. Tighten it up a little bit so you can see it like that. See? So it is curving a little bit. That's about it. There we are. So with the 30-year bond just kind of cruising along, there's no real sign of paranoia or nervousness with the bond traders. But like I said, they're pricing into a late March to May cut in interest rates. Matter of fact, they're projecting 4 cuts. I guess a full percentage point. And I guess, see, I was going to think that they would do that in the second half. To try to, help the election. That's what I thought at the time. That's in my head politically. So this is going to be real fun to watch and see how they play it out. But no and no and no. All right, now from there we go over to, where do we go to? We were looking at the yen. Oh, yeah, so we were looking at the yen. So now we go to the great experiment. That went into a daily sell yesterday, so that's pretty cool. I keep on thinking that means they're going to raise interest rates like 6.5% or something. I mean, that's the way it seems to work over there. They front run a great move in the market usually. Let's get rid of the volatility page here. Close Aruski. Yes. Let's see. Mountain says, I think there's going to be a full percentage point cut in 24 or 3/4 of a point. Yeah, well, the market's pricing it in. And I would assume, it's an election year, so it's awful hard to believe that it doesn't happen, that's for sure. And as you can see right here, here's the great experiment. They're moving down a little bit. Let's take a look at the last time they did something, like right there. That was pretty steady, and then they blindsided the market with it. So whoever is involved in this keeps their mouth shut pretty well. And it doesn't last more than 3 or 4 days or a week, but we'll see. I was just thinking, they have to try to slow it down. It got up to the 32.25 area. And, they got to try to slow this thing down a little bit. I mean, boy, what a question mark in my head. What does 2024 bring to the Turkish lira? That's interesting. What does it bring? All right. So that's the Turkish lira. And like I said, I'm always nervous about the idea they're just going to add another 6% of payment to this currency, have a nice big win for the holiday season, and then watch it fall apart again as usual. If they add another 6%, you have to think that we're going to go into the 36 area, honestly. Honestly. All right. So from there, maybe not. Maybe we finally reached this equilibrium. It's hard to say. All I know is that I got to yawn at it. I just know that we've been watching the Turkish lira go from like a couple points to 32 points. So it's been one wild ride. All right. From there, we slide over to the number 1 brick in the world, and that is the South African rand. And, last couple of days, the trend, or I'll say the last 3 weeks, the trend has been on the upside. But the metals market doesn't really reflect it as well, Let's put the rand up on J4X right there. And let's go to February gold. That's what we're looking at nowadays is February gold. And there is Feb gold. Gold. You can see here, it's like unchanged. It took off for a while, but it's unchanged. Getting close to the sell area, but nothing major. The weekly could care less. You can see all that. Same thing with Mr. and Mrs. Beta. And all the little betas joined in. Let's see if we can find the beta again. Where's GC? GC. GC right there. GC. And you can see matter of fact, on the beta, the daily is pushing down to the point where it's red. See, it's pushing on there. The weekly is still happy and not complaining. And we still are trying to figure out why our data feed gave us, a false negative there for a week, so that we had 2 in a row. And then when it finally started this week, it cleaned it right up. So somewhere along the line on Friday, it pushed it back into the buy. We weren't aware of that until Tuesday. And then, because it's only updating every day, it's a lag of 1 full day. So we'll have to figure what that's going about. That's on the weekly, not the daily, just the weekly. And then we go over to here, and we take a look at, as the Mountain says, could you exactly explain how market is pricing in a cut in 2024? Yeah, they they price in the short-term money. So you look at the yield on the short-term money, and they start to move it. It's just the yield itself. And so they start to show like a percentage chance of it being down. They actually, it's like a survey. It's like a survey. And money is saying that they see a cut up to, right now, over 52% say it's going to be a cut in May. I think it's up to 60 some odd percent in July, that type of thing. And now that the March one has reached 50 at the end of March. So it's it's a survey that comes out every day. All right, and so there is gold, and so that is the magic of gold. Gold, and that's the Feb gold. So from Feb gold, we'll slide over to March silver. We're in the March silver now. And March silver doing the same thing, trying to show a little pressure. But the weeklies, all of them are strong. So, it's not like they're falling apart. And so you can see as a silver, we've almost got to the $26 area, and now it's starting to look a little anemic. Just a little anemic. Nothing major. So there's the silver. Let's see what silver looks like in here. There's right there. The silver is still holding up, whereas gold is actually showing the difference. And we've been, the ratio of gold to silver has been really disappointing. They really beat it up hard. A little surprised. We keep on thinking that and so at this point there's no I'm not vote. Yep, that's what they're talking about. Okay, good. So at this point, the action is that let's save that too. Silver. Metals have had a great run. Since our weekly buy, we can't complain. It was down in the 22-ish area, and now it's traded almost up to 26. So that's been a great run. Same thing with gold. It was 18.5, went to 20.5. Platinum wasn't the most exciting. That was the surprise there. Silver coming to life. Another story about the Chinese banks. Their back is against the wall when it comes to the issues, about their problems and all. Banking systems having major problems. And maybe, I guess the anticipation is that the government will come out with a bailout. And when they do a bailout, then it benefits the ones that were prepared for it. And there's the daily buy yesterday right there. So we're second day and we're even higher. I think we got up to 90 maybe. No, we got to 388.05. So December copper is doing fine. Matter of fact, I guess we need to start thinking about changing to December copper too. We'll check that out over the weekend and go see who's the most active in the copper market. Right there. Let's save it. And just for curiousness, let's see what they're reflecting is who's the most active copper contract now. And the answer to that question is zip-diddy-doo-dah. It is March Copper. So we'll be moving to March Copper on Monday. March Copper. And that's just 2 cents over. So it's trading at 387 and change. Let's see. Let's see. Gold seems to be on a daily sell. It's trying, and a weekly buy. Yeah, it's. I would have thought that when we saw our beta show all that weakness on the weekly, that was really a really strong thing that had my concerns. But gold went up another $20-$30, so like $35, something like that. So. We'll have to watch and see if the weekly starts to dip going into next week. So far, we haven't seen that, and we can go back to it real quick and look at that. But yeah, we're not seeing the dip. I guess platinum will be interesting to see if it's dipping. See right there, the daily's dipping, but the weekly doesn't seem to care at the moment. It is underneath the manifold. I can say that much. But we need it to start turning over to believe that there's weakness coming in. And then there's the platinum. Now platinum's doing the same thing. It's holding up very well. It doesn't really care that much about the action. It's. I kind of thought platinum was going to lead us out of this. It usually does. It's gotten a little sloppy, but then it's the end of the year, and everybody is nervous. That's what it comes down to. All right. From there, we'll slide over to the energy sector. Let's just save the nat gas there. There it is. Now let's go to there's the vote by OPEC Plus was a bust. You can see they popped it up and failed very quickly during the day and knocked it down. I think that's because, as I understand it, Saudi Arabia does not like Hamas. They find Hamas to be their newspapers and all are saying it's very against Islam. And they don't like the violence, and they don't like all that action that's going on. So that and Hezbollah, they're frustrated with both of them. And so I guess if they supported them, they would raise oil prices more and actual pressure into the market. But they're not happy with them. So by not being happy, that's really put a major pressure point into oil, not the opposite, not taking it up. They're not defending oil. That's what it really comes down to. And Saudi Arabia is the major swing player, and when their newspapers ridicule Hamas and say things like they're not following Islam and all like that, that says to you that they're not going to help them. That's what it means. So from there, let's take a look at Brent. Let's see what the Brent is up to this morning. I imagine that too is finding ways to go down right there. There's on J4X. You can see a red. The pressure's on there. The fast is at 46. The slow is at 58. So it's definitely pushing into the sell. Let's see what it looks like over on the beta. Beta. Yeah, right there, the January contract. What's up with that? There it is. Now that doesn't look right. There we are. Go like that. Go like that. And let's go find that. There we are. Let's go find the beta. We're not getting an update on our platform. Not sure what's going on there. There's some issues going on with the beta. Some things are coming up and some things are not. But over on J4X, you can see that it's trading down at 80. It's come off the highs of 85, 86, and the pressure is on. From there, let's check out. What are we going to check out? Let's check out natural gas. NQs. Let's see if we can get that on the beta. NQ. or an NG. I'm sorry, not NQ, NG. There it is right there. There's NG. It's on there, and you can see it's in that weekly sell. We'll put that on the screen right there like that. And let's put it up on J4X. Like so. Like so, like so. Let's see. Nat gas right there. So the pressure's on that too at the same time. And then, what else we got going on there? From there, what else can we say? Nat gas just showing the same situation. Lots of red. Fastest at 10.7 basically, and the fastest at 11.7. So we're down towards the bottom of the range. Okay, so we answered the gold there. Now let's take a look at the energy company in Spain. I remember telling everybody yesterday, I found out that 20% of all the natural gas coming out of Russia is being exported by Europe. That's something. And there is the Spanish company. It's going into a minus. Look at that. Daily sell yesterday. It looks like it's just underneath today. You got a couple of red going on there. And at the same time, that weekly needs to start dipping down further. We won't know until Tuesday morning to see what the opening looks like there, if they've pushed it deeper down. And let's see. Let's put it up on J4X right there. This is a energy company in Spain that matches real well with the current, with the energy, natural gas itself. You can see right here we got green going on there. We got the fast at 47. We got the slow at 53. So it's still in a downwardly trapped neutral position because it's this is going down, but it's at it's not at the low end of the range. These are green. We need it to turn red to make it a short. Over here on the beta, we're in the daily sell already, and waiting for the weekly to roll over, which it has not done. So from there, where do we go from there, traders? I guess that's about it. We can take a look at some stock indices, and then we'll get out of here for the weekend. So let's see, right there. There it is right there. You can see, let's just close that. Yes to all. So you can see right there, the stock indices down to 68. It's basically unchanged at this point. And that's the intraday. It's trying to bang it around in there. At one point I thought they were going to get going, but it seemed to fail. There it is right there. You can see it's in a daily sell now for going on a third day. And it looked like it was trying to take off. We're in the weeklies, so it's not the most exciting thing. You can see same things going on in the NASDAQ 100 right there. Same pressure going on, but we're still got those weeklies looking very strong. So when it comes to the, let's see, when it comes to what kind of title we should call today. And I really think that the interest rates themselves are the factor. So window dressing and interest rate hopes. I think that's what it comes down to. That's because that's exactly what it is. It's those combinations. Okay. Okay. And so from there, does anybody have any more questions? And you got them all when it comes. Now, here's the here's the gray lady itself, the grand lady of them all, and that is the Dow Jones Industrial Average, not having much of an issue whatsoever, just showing strength, and more strength. Even now, way up high. Almost 3/4 of the month it was in the buy, daily buy alone, not counting it was in the weekly buy. So they've been really reaching for the big. What they call the large cap stocks. That's been really the pressure. Alrighty. So from there, we're going to get out of here, traders. So this is Doc from North America saying everybody have a safe and smart weekend. Let's see, Doc, are you starting your live stream an hour early now? Yes, that's what happens. It's an hour early because of the time change. Unfortunately so. So our title's going to be window dressing and window dressing with interest rate hopes. Interest rates. Yep. Bingo. Bingo, bango, bongo. There we are. That's the title today. Yep. All right. We are out of here. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders. Catch you on the flip side. Have a safe and smart weekend. Ta-ta for now.